Perfect. Okay, so one of the things that I do, I put on a lot of conferences. I like to make it awkward. I like to make it interactive, or at least interactive at the beginning. So I know we just had a little break, but if we get everyone to get up real quick and give two people a high five. And Scott, come back here and stand right, I think maybe there. Okay. I think, no, let's see how. So Scott and I just recently got introduced to each other. He told me what we were doing. We had this great conversation. We were like instant kindred spirits, kind of in this blockchain journey, if you will. So when he told me about this event, I said, oh, it's coming up in a few weeks. Sure. So, but excited to be able to be part of the first blockchain event here in Spokane. I think it's a really significant moment for the community and for what's going on in the space as a whole. So thank you very much for having me. And I just met him today, and as you can tell, there's a big height difference between Scott and I. So it's like, hey, Scott, let's do a high five, but you stand 3 stairs down. So anyways, yeah, today my presentation is really about kind of my future predictions for blockchain, and mostly about my experience kind of in the startup scene, starting here in Spokane, and then moving to Silicon Valley, the lessons I've learned along the way. Yeah, more and more over the years, I always say that I don't consider myself an expert in the space, but relative to the people who consider themselves experts, I've spent a lot of time in it, so I'd like to just impart some of the things that I've learned along the way. So let's just jump right into it. Okay, today I'm going to talk about my origins, the role that I played and our group played in the 2017 ICO craze, what's now, what's going on, fundamentals, what I think is really important to move this industry, and then finally talk about what's next, and then we'll open up to questions from the audience. Does that work for everybody? Cool. And feel free to, a little feedback at any point. Just, if you agree, disagree, just let me know. Okay, so my name is Brett Noyce, founder and director of Unbank.Ventures. We run an early stage financial technology incubator program, so we're very interested in working with minimal viable product, first to market type products that are going into the banking space. And I've been running our program for 2 years. We've run a total of 4 cohorts, working with 33 companies throughout the world. And I've also been involved in different programs, working with the TechStars program. Our program is actually a TechStars affiliate now. I worked for Tim Draper, building the FinTech incubator program there, and Jason Calacanis, who's the #1 angel on AngelList. Some of the stuff that I've done recently, I got an opportunity to speak at an event that Vitalik Buterin, the founder of Ethereum, was at. I was probably a little asterisk at that event, but we spoke on kind of the future of where we see angel investment and early stage VC in that space. Spoke at another event on the subject of fintech and blockchain, which is an area that we spend most of our time on. And Tim Draper was there, and then Michael Arrington of TechCrunch were kind of our main speakers. And then a little bit one-off, but we do a lot of work around, and we'll be increasingly doing more work around intellectual property and valuation. I won't really talk about too much of that today. Happy to talk offline, but what I've been kind of saying at a lot of these different more investor-focused versions of this is that a lot of these companies that have went through this ICO craze are now on sale. So if you're looking to acquire some talent and some tech, and you got some money, this might be a great opportunity that's emerged out of that. So happy to talk offline about that. As far as my background, I never expected to be in this space at all. Like I suppose, like many people, never expected to be in the startup space. My father owns a small veterinary supply company in Yakima, Washington. I went to Washington State University. My entire goal was to, aspirationally after going to Gonzaga, was to get into mergers and acquisitions and buy up small companies and turn them around for profit was always my dream. And I initially went out to Wall Street in the spring of 2018 to watch the financial services industry collapse in front of me. I ended up back in Spokane going, what am I going to do? And I feel like people have really forgot the lessons from that crisis, but at least for me, it had made me rethink my career path. A lot of the doors I expected to open up and the path I expected to take really didn't come through. So with an entrepreneurial background and just in general, I had to kind of say, okay, what am I going to do with my life? How am I going to make a living? My father and I started several different kind of more conventional brick and mortar companies, selling lamb, elk, and bison to specialty restaurants throughout the Northwest, broker-dealer type stuff in the vet supply. And what I kind of learned, especially from the running the all-natural food company, is distribution, right, and scalability. And so what I learned getting involved in Startup Weekend and the local angel investment group is that these technology companies can scale, and these companies, these more brick and mortar companies, don't scale. And although it was really kind of showed me why I was failing at building these companies. So I kind of went down that rabbit hole. Went to my first Startup Weekend in Seattle probably maybe 7 years ago. And if you're not familiar with that program, they teach people how to launch a technology type based company in a weekend. Instantly fell in love with it and decided to put on the first event here in Spokane. And it was challenging. It's a more conventional, and I come from a very conventional background. Just the idea of getting someone involved in technology startups in this region was challenging, but I had great support from Gonzaga and a series of entrepreneurs in the region, and we were able to launch that event, and I put on 4 of those before eventually leaving. Other things I did while I was here, put on the region's first hackathon, which is interesting since I've literally never written a line of code in my life. I'm not smart enough, so for any of the developers and engineers in the room, congratulations on being real builders in this space. We need you. And other work I did is I worked for the Spokane Angel Alliance, helping find and source companies for that group. So all of that's kind of like my foundational. Through this work, I ended up going to a conference down in Silicon Valley and realizing once I went to that event that if I wanted to be in kind of the venture space, that at least for a period of time, I need to spend time down in the Bay. So I packed up everything I owned and I moved down there, moved into a girlfriend's who had a 500 square foot place overlooking the bay, beautiful but teeny space. I can say that for the first year about the only thing that worked out was the relationship, which was great because otherwise I would have been homeless. But luckily that worked out, and some of the projects that I worked on during that first year were interesting and pretty foundational to what I do. So it was kind of that reverse overseas or outsourcing. I was on Elance just trying to get work. So I was building incubator curriculum for an accelerator program and an incubator program out of Singapore, and basically making less than minimum wage and trying to keep my head afloat in the Bay Area, one of the most expensive markets in the world. So that was stressful to say the least. Luckily I met a nice young woman that believed in me and continued to keep a roof over my head. I think the best thing that came out of that period of my life is we're now married, so that worked out. So yeah, so sometimes the path in entrepreneurship is very much seeded by smart women that believe in you for some odd reason. So congratulations to the supportive women. I see Luke's wife here probably knows a lot about that story. Other things I did is I worked with the Techstars Next program. So we worked with very, very early stage companies, helping them get into bigger or different programs potentially. It's a derivative of Startup Weekend. And I learned a lot about, like a lot of these programs, what I didn't really fundamentally believe in. A lot of them are like very mentor-centric. And through my work in those programs and working with other accelerator programs, I really learned what's really important to entrepreneurs. So our program is really a pared down version that really focuses on 3 things. We focus on companies building great product first and foremost. Second, customers, which is kind of almost selling something, which doesn't always come to front of mind for entrepreneurs, especially in the Bay Area where they think they can just raise money and worry about business model later. We focus deeply on that from the beginning, and the last piece is scaling once the other pieces are set in place. Next, I was fortunate, and probably unfortunate at the same time to get this big break. It felt like being in like Hollywood. Getting my big break with this very charismatic, outspoken angel investor, self-proclaimed #1 angel investor on AngelList, and says he's the #4 angel of all time. It's hard to really, I don't think any of that's true, but nonetheless, I got to work for him, which was an interesting privilege of making about $2,000 a month, working 80 hours a week to help put on the festival. That they put on a large TechCrunch style festival, about 10,000 people, so I was on the growth marketing side for that. and like many of these programs, wearing a lot of hats. So growth marketing, doubled the size of the event, vetted all 250 companies that were in the startup pit, which gave me a great opportunity to look through hundreds of different pitch decks and learn a lot about a lot of different companies. And then the last piece is I got to help launch his incubator program, which is kind of my area of passion. So working with early stage companies and helping them grow and scale at kind of the earliest stage. And following that, I got to work for this very interesting and charismatic individual named Tim Draper. And does anybody actually know who any of these people are? Does anybody know who Tim Draper is? Okay, about half. So famous for investing in Hotmail and Skype, Tesla, and a series of other ones, Twilio, I think more recently, Robinhood. Very famous Silicon Valley VC, also very famous for being early in Bitcoin. I believe he bought the Mt. Gox, is that the correct one, auction. So he bought all of that early on for an undisclosed amount of money, and is probably, well, was, and like many people in the Bitcoin space, right, was probably very, very rich and poor in a very short period of time based on how much he's holding. And he's very long on blockchain. So working for Tim was a really good opportunity just to be exposed to this space at that level, and work with somebody who's, okay with being contrarian. And while there, I got to build the Draper FinTech Incubator Program, and this is where we would work with early stage financial technology companies, and then work with different corporate, either consulting or banking partners to commercialize that technology. Okay, so while there, I got deeper into this space, right? If you talk to anybody that's kind of in the blockchain, Bitcoin, kind of greater ecosystem, it always kind of, the word is often used as went down the rabbit hole. And I think that's kind of what, when I look back on it, I never really think about it in the day-to-day, is you kind of, you start up small, you come to a conference, right? And, or you buy some Bitcoin or someone, so it's like it always starts that way, and then you kind of get more and more sucked into it, good or bad. But so one of the things I did while there was I hosted, just as a side project, hosted the San Francisco Bitcoin meetup. And what I like to say is the most interesting group of anarchists I've ever worked with. So there was interesting people like Brock Pierce who came through there before Brock Pierce was a celebrity in the industry, with Blockchain Capital before they had even launched their fund, and kind of talking about this crazy idea of putting investments on the blockchain and investing in these companies even before the pre-ICO madness. So it was an interesting group of people. I think one of the more along the lines of the ones that was like really made me think I'm really, really on the fringes of all of this was there was a guy who was working on and this is before it was even legal, so it was drone cannabis delivery using somehow blockchain was involved. So this is the type of people that were showing up at this type of event. So this was definitely, the outer bounds of what I did, and I was always very intrigued with these people. But on the other side of my day-to-day job, we work with, large global banks. And so we just have this thing where we just say no to Bitcoin, right? Like, so there's these type of companies and, these type of projects where there's just no way that we could possibly introduce them to our corporate clients. So in the day-to-day stuff, that was kind of like, nights and weekends projects and kind of an interesting. At the daytime, we were more interested in stuff that the banks thought was, risky, but was comparatively not at all. One of the companies that really kind of got me down this rabbit hole was early we worked with a company that was building a derivatives trading platform on Ethereum. And this is when Ethereum was trading at like $3, had just probably done their ICO at just $3 per token, if that's the correct term. And the group that was doing it was really trying to get me involved, and I really didn't understand it. But the one thing I did understand is when they said to me, they said, Brett, on our platform, we can do a trade settlement in 15 seconds versus 3 days. And from like a technology and kind of venture standpoint, I was like, I don't know what this is, but I'm sold, right? Like it just seemed like they landed on the moon. So we put this in front of a series of different, corporate clients. Everyone liked it, but no one wanted to touch it. And I think we're probably about 4 years since that. And I don't know that much has really changed, honestly. It feels like a lot of stuff has moved forward, but there's still a long ways on the adoption cycle of all of this stuff. So following that, I went on, post leaving Draper, I started my own program, Unbank.Ventures, told you a little bit about that. And the other piece of our business that we've kind of been, where we've got to really have a lot of touch points with blockchain companies are the event side. Last year we put on 8 conferences throughout North America. We were in Silicon Valley twice, New York twice, Chicago, Toronto, DC, Seattle. I think that's all of them. So we got a really good feeling of what's going on in the blockchain space kind of in North America. And when you're in Silicon Valley on a day-to-day basis, it just feels like drinking out of a fire hose. It's like blockchain, of course. It's, I make this kind of somewhat of a joke, but it feels real. If I were to fall down these stairs in Silicon Valley, no one would offer to help me up or get me a bandage or call an ambulance. They would offer me some sort of blockchain solution, right? And I want you to understand, blockchain is not the solution to everything. Like, it's very important to understand that there's a lot of things areas where it can make drastic changes in cross-border payments and give currency to people that have unstable governments, and there's so many things, there's so much promise around blockchain that are amazing and are really drawing a lot of smart people into the space. But don't buy into all of the hype, right? It can't solve every single problem. So I don't know where I was going with that, but anyways, blockchain's not the problem to everything. But anyways, so going around the country, we got an opportunity to kind of see what other markets were thinking. That's why I'm excited to be here today. I kind of get a gauge of what's going on in the Spokane market and markets like this. When we went to kind of my experience of going to New York, they were kind of like, they're gamblers, right? But they also want to make money. So they're still like, Silicon Valley doesn't seem to care. They're just like big ideas. Kind of have their head in the clouds. We go to New York, they kind of have their head in the clouds, but they also have their feet on the ground. So it seemed a little more grounded. And then we went to Toronto, and they were like incredibly conservative. They were just waiting on to hear what the U.S. regulation would be before they jumped in. On the venture side, very grounded and thinking, like they just want to see real businesses built before they would invest. Went to Chicago. I know there's a Chicago guy in here who works for a Chicago-based, a couple. So this is my limited experience. I found Chicago to be a little dysfunctional as far as a startup community. They seem to be focused on a lot of like nonprofit. They just seem to be, I don't know, I was very confused by Chicago as a market, but I think it's, as far as capital markets type projects, I actually really like Chicago. I would like to get more going there in the future. Then we went to Seattle, and Seattle, especially because we kind of went through this hype cycle, so we were catching them at the end of last summer of 2018. Some of the companies we had worked with that are on here had already raised and lost their money, so it felt like 1990s grunge rock, right? I thought I needed to give these people some Prozac. We're putting on this panel, and everyone was talking about the doom and gloom, and I don't know if that's just Seattle culture, or if that was, Seattle culture meets ICOs. I was afraid that, like, this is the next genre of alternative rock or something. So it was an interesting experience, but in general, it was really good to see kind of the different sentiment around blockchain technology, the adoption of it, and just in general, the meeting of the communities, right? Because ultimately, when all of this started, it was a series of, crypto weirdo anarchists, that were getting together, that were exchanging, file drives, and, so it's come a long ways, yet it has a long ways to go. So we got to be part of, through our events, mostly the previous summer in 2017. It felt like a fire hose, and I think it kind of was. I call it the 2017 ICO craze. So we worked with different companies, including Storm, which I was still an advisor to. Talk more about that one. Civic, which is building an identity product. Polymath, that's kind of in the, I don't even know what Polymath does. Financial services. Helped launch Bancor, which raised $153 million and then lost 96% of its value. So I don't know, I don't know where we yeah, it's great that, to be part of that, but we've also seen an extreme downside in all this, and the speed at which all of this is moving. It's very boom and bust. Science, which is an incubator program, raised over $100 million. They're based out of LA. BankX, I think they raised about $40 million. What has kind of been disappointing over the last few years is when, some of these projects, especially for me in the financial services industry, seemed really promising. I think BankX, when they first went to market, we were talking about building a new core operating system for banks. It sounded amazing, but what really these companies ended up doing was just building another crypto exchange and not even remotely delivering on their promise that were built in their white paper. Other companies we've worked with are Loki, which is interesting, putting intellectual property on the blockchain, and then creating products and services for inventors. I still think there's a solid company there. Arc, which is who knows what they're doing today. They were building a platform similar to Ethereum. Definity came through, but I think they're going to be a solid project. It took them another year or so before they raised a large round. And EOS was our biggest sponsor, so we were kind of part of that ride as they raised over $4 billion. So we've had a lot of touch points with kind of the brands, the bigger name brands in the space that have come, and hopefully, well, some of them will go. And I don't think that's all bad nor all good. So my experience of being an advisor to one of these ICO companies was kind of interesting. So we worked with Simon Yu, who's the founder of Storm, and his background is he went through an accelerator in Seattle called 9 Mile, which I don't think exists anymore. Had been early in the Bitcoin space in an advertising platform, very small company, bootstrapped, just doing it, in my opinion, everything right. Then got involved in the ICO craze and went from, barely being able to raise venture early stage funds to raising $32 million over about a 3 to 4 month period of time. And I don't think that that's healthy for anybody. And I think Simon seemingly has handled it well, but if you're a 25-year-old, 26-year-old entrepreneur and suddenly you raise $30 million, it really changes everything. And everyone said you're suddenly a genius and everything you do is great. But what Simon has learned in a very short period of time, that $32 million has evaporated down to about $3 million. And so he's got a staff of, now he's laying off people. They are actually, a company that has a product and sells it. They do about $300,000 a month in reoccurring revenue, but unfortunately their burn rate's about $350,000. So they're quickly running out of money, and now they're having to go back and almost doing this backwards. Right now they're having to go back to conventional venture capitalists and say, hey, please invest in my company. And a lot of the narrative is around, but I thought you raised $32 million. What did you do with it? Then suddenly the power goes, I think for a while the power was really in the hand of the entrepreneurs. For us that are in the incubator, accelerator, and venture, we really looking at this and questioning, if a company can raise, equivalent of a Series D, amount of money day one and be publicly traded or listed, why would you ever jump through all the hoops that an investor wants? So it very much looked like venture capital was going to go extinct, but now it's a year later. It feels like the fundamentals have been reset, and now a lot of these companies, and I see a lot of the companies we work with that are reaching out to me, looking to raise their, a lot of them are, there's different words around it, but they're basically down rounds. Their bargaining position is much worse. And I think a lot of these companies would have been better off if they had never raised these large sums of money, because effectively, this money really wasn't real, and it went away very quickly. And I don't know, it's kind of I got mixed feelings on it. It's a little bit unfortunate. It's unfortunate that it wasn't done in a more controlled manner, where they could have raised, or that the money would have been distributed in a more tranched way where they could have used it based on milestones. But I don't think it's healthy for any, and we've seen this, I don't think it's healthy for anybody to raise the significant chunks of money just based on a white paper or a pitch deck. And I think we've seen different cycles. I think it probably kind of mirrors and is a little bit before my time, the first internet website boom, the 99.com boom type stuff, where people were, there was a lot of irrationality in the industry. So we've taken a more measured approach and continue to push on as a conservative in retrospect to these other companies, incubator program. We've incubated a total of 33 companies. We have an upcoming cohort launching in April. But our last fall cohort, we decided to focus all on blockchain companies. And we worked with a real interesting smattering of companies, touching different points kind of in the larger kind of financial technology or adjacent industries. ShopSing, which was a trade finance focused platform, DigiBuild, payments in the construction industry, transplanting in the logistics. An interesting one that's an interesting new challenges that are coming up sagely is compliance and accounting in the cannabis industry. So there's no lack of banking issues, payments issues, and challenges in that space. We don't necessarily want to be in that space, but we continue to see that there's a lot of interesting, banking challenges that can be solved either through technology or hopefully through technology and adoption. One in Kusta in the mortgage space, one in a global invoice factoring, which is very interesting. So one of the things that we see is some opportunities to open up investment classes that really haven't existed maybe at the global level. The blockchain allows that. So KubeCoin is focused primarily on using blockchain to finding investors in, like let's say it's the United States, then matching them with invoices in third world countries or emerging markets like Mexico and Colombia where they're based, and opening up this new investment class where I could invest in these invoices in different countries where I never would have had access to that before. Eventually when they have enough on the blockchain, they'll be able to pool those and sell them off as an asset class in itself. And interesting things about that is where I think is very interesting is that you get the opportunity to create a working capital for businesses and people that wouldn't regularly be able to enter the banking system or have access to capital. And you also get the kind of the arbitrage or cross-border opportunities to make money on the difference between the currency. Y-Green is based out of Seattle. They're working on, the initial idea was using energy as a currency. Honestly, the founder came to me at our Seattle event and I thought he was insane. But he also, after he convinced me to have a couple more meetings with him, really bought into what they're doing, and through our program, they've really found a good product market with being able to sell energy back and forth between the grid. So we're excited to see what they build in the upcoming years. Visa focused on creating like a risk sharing or a insurance product for companies or for farmers in emerging markets, using both blockchain technology with smart contracts to deliver the funds back and forth, but also using satellites so that they don't actually have to have people in the field. The Europe-based company, very exciting. Secured credit systems focused on data. I think we talked about, someone spoke on Experian earlier today. So we have a company that's kind of trying to be a decentralized version of Experian where the customer actually owns their data. We think that's going to be a big emerging space. I think it's going to take a long time for mass adoption and adoption for banks, but I think that we're all kind of moving in that space where we want to own our data and we don't want other people to profit off of it. And the last one that was in that cohort is an accounting system to be able to reconcile crypto payments between like a e-commerce platform and or a small business and banks. So all of these companies are kind of the foundational level of, and they're all building on top of existing platforms. So we've worked with companies that are building on different platforms it went quick. Oh, yeah. So let me give you a little flip through it. What I see in the future, alluded to a little bit of this. ICOs, these companies have boomed and bust. So we foresee that in the future, there will be a lot of mergers and acquisitions and people acquiring the talent and the tech. I'm asked this question a lot. What do I think the next killer DApp is? I don't care. We work in conventional, building products and services for the financial industry. A lot of the stuff that happens in this industry, we kind of think to be a lot of noise. So that's not something that we spend any of our time or energy on. Yeah, I just learned that I just got a note that Dispatch Labs is going out of business. So that was interesting, just earlier as I was waiting to speak. So here are some of the protocols that we think are interesting. So cross-off dispatch, Ethereum, the speed of things starting and dying is very quick in this space. And for us in financial services, we think that the Ripple platform and Stellar are both interesting, and other stuff in the more conventional side. So we're an Oracle partner, so they have a Hyperledger kind of plus product that we work with, which is great for actually commercializing this product in the real world. And banks and everybody's pretty okay with IBM and Hyperledger. Although I don't think it's the greatest platform, it's good if you want to play in the mainstream. Token economics, building. One of the main things that really people failed to understand during this ICO craze is that they were basically creating a currency. Things I've said in the past is, like I just kind of ignorantly said, I don't know how to create a currency. And it turns out neither did these companies. And so a large portion of their failure really relied on their inability to really understand their business model. So we're putting on some education around that in the upcoming weeks, hope to kind of get our mind wrapped around it. We think that's going to be a bigger part of venture capital going forward. And here are some identity projects. We think identity is kind of the baseline for entering more people into the system, and especially entering them into this technology into the banking world. A lot of people are talking about stable tokens, but when I ask them, so I have no great ideas on this. I know that we need them. I know that Tether's had a kind of ups and downs as far as reputation. But whenever everyone kind of on these conferences that I've spoke at, everyone says, this is really important, but no one can explain to me which company they think is going to win. So I think we still have a long ways to go on the stable tokens, but I think everyone can kind of collectively agree that it's a big part of, that we can't have these fluctuations where these different currencies are fluctuating, thousands of %. So the last thing we're going to leave you with, when I was, I guess, 7 years ago or so, I was at a conference in Iowa, and there was a speaker from Microsoft, and he said, the future is here. Like, it's already here, right? And he just kind of put it out there. He's like, are you going to be part of it, right? So I think I'd like to commend everyone who's here today, right? So I think anybody here who's here today is thinking, is going to be part of the future, right? We think that there's going to be a very different, decentralized future. Maybe a lot of it will look the same, but in general, it's coming, and you guys are people that are at the frontier of it, so I commend you guys for being part of that. And I don't know, do we have time for questions? Yes, no? No questions. So happy to talk more offline. Thanks, everyone.